short introduction, if I may, on Brendan Wood International. The company, I know you're going to find this impossible to believe, but the company was actually incorporated in 1970 in Montreal. And I know what you're thinking, he looks so young, how could that be possible? We grew the business on a very simple principle. We believed that as an advisory business, if we were the best and first intelligence provider, we would attract the best mandates. And we have adhered to that principle religiously ever since. So we're not hard to keep track of. We are constantly about the business of creating intelligence which is at the leading edge of what the world is all about, and particularly as it relates to the capital markets. We, 4 decades later, we are a global firm. We're active in about 40 countries. And we have offerings in investment banking. There are probably about 100,000 investment banking post-mortems in our database. There are as many debriefs on institutional shareholder habits and practices and loyalties to the providers of sales, research, and trading services. We monitor private equity and institutional investment management around the world. Our core offering, and the one that I think puts us at the leading edge again in the current era, is called the Shareholder Confidence Index. And the index is essentially a rating of the shareholder view and the shareholder commitment to own the companies in their portfolios. The process is really straightforward. We identify a group of shareholders who are fully empowered in a major way. There's $2.5 to $3 trillion of equity capital in our panel. There's 2,000 investors contributing to our work. And what essentially happens is that we engage them in a process where they identify the reasons for which they own what they own. They tell us what their commitment to continue owning it or increasing their ownership of it is. And they also advise us as to why certain stocks that they would be empowered to own are not in the portfolio. And the yield on this process is that we're able to help corporations better understand how they're playing out in the minds of their shareholders and would-be investors. We're able to help the investors who contribute to the panel understand what the rest of the world is thinking about the stocks they own. And if you think about the transcendent power of that, it's now possible for an investor in Nebraska to understand what his or her peer in Singapore thinks about the same company and has a similar position. Again, the key variable for us, what we call the independent variable, is the commitment to own. How many shareholders own a stock? And then what percentage of the population is A, aware, or B, has formed some discrimination. We feel that entire world is getting smaller and smaller, and frankly we're helping to make it so. So it's a variation on the theme, I think, of what Mr. Menon was referring to as transparency. We look at a variety of criteria, as I mentioned. Top Gun strategy would be the first. What does that mean? It means, one, a Top Gun strategy attracts customers and assets through a compelling value proposition, captures higher level operating ratios, attracts Top Gun professional employees, creates brand value, and attracts capital. Top Gun board is the next thing we look for. And what does that mean? Top Gun board is a board that delivers Top Gun strategy, delivers a culture of performance and accountability from CEO downward, delivers growth in shareholder value. I couldn't agree more with Mr. Menon's comments about quarterly earnings and short-termism. ill-conceived and unnecessary. Growth in shareholder value, as I said, an effective shareholder campaign. There is no question that, and I'll come back to this in my remarks, but there's no question that Top Gun boards also deliver a communication level with investors and a level of credibility with investors that stands right out. So if we look at the top 8 to 10% of corporate boards around the world, you'll also find those boards delivering exceptional CEO, exceptional strategy, but exceptional communication and openness, and almost a campaigning amongst shareholders. By contrast, you'll find boards who are sensing themselves as privileged and defensive in their behavior. You'll find them doing the absolute opposite. There are prolific examples of that. If we're chatting later, we can talk about Canadian Pacific Railway that had a non-transparent attitude. Sprint, a communications company. I challenge anybody in this room to get hold of any director anytime connected with Sprint, or any other executive for that matter. You might try it at American Express. I hope there's nobody from any of those firms here. Next thing we look at is the quality of the CEO standalone, the quality of the CFO, the senior management group. And when we look at senior management, investors are most interested in understanding whether or not there's been a thoughtful, futuristic approach to managing the business. More particularly, is there succession in place, especially where the CEO is concerned? Next, we look at the short-term growth, long-term growth prospects of the company, as again interpreted and extrapolated by investors. We look at reporting and disclosure. Balance sheet of the company. Is this company equipped as an acquisitor? And that, obviously, in the world we live in, is inorganic growth is a very popular concept, and the means to do it is one thing, but the strategy behind it, we believe that a lot of inorganic growth is wasteful, and investors feel, as we do, that a company has a duty to prove to its investors before it embarks on inorganic growth strategy in place of an organic solution. They need to be totally accountable for the full process of integration, capturing the market share, and engaging the assets of the company that they're taking over, as opposed to some nasty set of fights and departures of the men and women with the ideas and so on and so forth. There are over 2,000 names on the index today. 1,000 of them have been around long enough on the index that our data is it's like DNA. We're adding to that as we go. We're adding a small mid-cap index, which is quite appropriate for your market and Asia as a whole. We have formed an association with Mileage Group here in Singapore. They're marvelous partners, they're wonderful people, and we have felt heretofore a little unready, in all modesty, to address the local relationships that we wanted to have and the depth of communication we wanted to have in the community. So our partnership really has to do with the fact that Brennan Wood International is bringing the global perspective and a lot of data to the equation, especially as it relates to global sectors, but our local partners are the communicators and the relationship builders in the local market. So we're very excited about that development, and we look forward to visiting the community far more often and equipping our colleagues to serve their clients better. The index, I should say, is an overnight success in 33 years. We first started doing this work 33 years ago. And we were a little bit ahead of the curve, I think, because we really have been very successful with it only in the recent years. And you might ask why. We really created the product in what you'd call the information age. Everybody was completely excited about the idea that we were now living in something called an information age, where traditional industries and processes were being replaced by this unique product, which later became a complete commodity, called information. It took not so long for information to become so available that the biggest follow-up business was, how do you sort it out and get rid of some of it and keep what's important. Needless to say, that age of intelligence was the period during which they had search engines and all kinds of innovations to sort out what was meaningful and what wasn't. Follow that up with what we live in now, which is the age of full disclosure. And the age of full disclosure means the emperor really doesn't have any clothes. It's a see-through world, and if you're not at the leading edge of that development, then you're fighting a defensive battle because it's not going to go away. And shareholders' rights and the role that SIS plays and many others around the world it's not going to diminish. The demand for full disclosure, transparency, and a management and a board who can live with it and practice it and believe in it and turn away from the idea that it's an intrusion and turn toward the idea that it's actually an asset. I'd like to give you just a little bit of a feeling for what it is we're telling our clients around the world about the current state of affairs. The majority in the Brennan Wood panel are highly influenced by their perception of strategy when selecting their long-term holdings. Trillions of dollars in the panel are therefore invested in organizations perceived by investors to excel in strategy and execution. The predominance of these linked attributes in the minds of investors places primary pressure on the visible CEO, but now makes connections between strategy, execution, and board. While managers of mutual funds and index products are likely to be more passive to boards of directors, the interactive or strategic investor is attuned to the board's role in strategy and at some level holds the chair and the board accountable for the performance of the CEO in executing. For several decades, corporate directors have rarely been in the spotlight. Largely unknown to investors, directors have typically operated behind the scenes. However, that is changing very fast. Investors are now assigning responsibility to the board for corporate strategy, for culture of performance, a variety of other accountabilities, which in turn force the issue of accessibility, if not a demand, an outright demand for board directors to campaign for election. The rapid development of board accountability accompanies a transition from the information age to the age of full disclosure. Corporations are being pulled into transparency, which appears to be enveloping society as a whole. Shareholder activism has become a notable case of lately Canadian Pacific, Procter & Gamble, now under pressure from the same activist. Shareholder activism has become a prevalent investment theme. Its popularity now makes it a common investment style. Look for it. You don't have it here in a big way yet, but it is going to become part of the community. And unfortunately, even though it can be somewhat predatory in its undertakings, it does indeed address the problem of a recalcitrant board of directors. Board activities centered on governance and compliance, however well discharged, are now taken for granted by investors who are far more anxious for strategy and leadership. According to shareholder votes, top gun board members are those perceived to play active roles in strategy and execution, and underlying this really, really heavily, driving the business in a bold but prudent manner. I would say from all my years in the business that I'm in, which is the intelligence business primarily, there are three forces in the universe. The first is the force of building, the second is the force of preservation, and the third would be the force of destruction, which speaks for itself. But a little bit of the dialogue I've heard around town these last few days that I've been visiting here has to do with the issue of is it better to be connected? Is it who you know, or is it how good you are at what you do? And it's throughout the world. The idea that directors belong to a private club, meaning that for them to be included, somebody must be excluded, preservation means that I don't want the world to change. I'm in a privileged position and I want it to remain the same. Fortunately, that's not true of Singapore, and I hope that it won't be part of your future. But when you think about it, the builder is everything. And if you look outside these walls at this marvelous, wonderful state you have, how did that happen? Somebody was bold and visionary and took it upon themselves to make it real, make it happen. They were builders, and of course they attract their enemies. But to see in the corporate world an undoing of this long-standing idea that it's a world of privilege, and one is qualified to belong to the club and others aren't, means that to win, somebody must lose. And I think that as shareholders, and I admire what David is doing with SIS very much indeed, because I think he's tackling the business of pomp and privilege in a meaningful way. And you as shareholders, you get my vote and you'll have my help if you go likewise. I'd like to see the builders win, and I'm sure you would too. Thank you very much.